Good evening, everybody, and welcome back to another class. Stan, can you hear me clearly? Oh, you can hear me?
Yeah, I can hear you.
I think your voice is breaking. Stan, can you hear me? I want to know if it's my network or. Okay. So good evening, guys, and welcome back to another class. So I promised to make this class for slow learners. I think the last class we did for slow learners, we did market structure, demand and supply, and I want to think that by now you guys are clear with market structure and demand and supply, right? Then I think after market structure and demand and supply, we introduced some PDRs which may be confusing most of you guys, which I thought to talk about before the entries class tonight. Give me a minute. All right, so as I was saying, which I thought to talk about again, so that when we start the entries class properly, you guys don't get confused, right? Now, here's the thing about these PDRs. The first thing, which is like the most important, is the fact that these PDRs, they are what? They have an hierarchy, which I dropped on the group. I told you that the first one on that hierarchy is what? The reclaimed blocks. This means that the reclaimed blocks are the ones that have what the highest probability, right? Probability means chances of what playing out. They are like, it's just like when you have a family of what, let's say 7 children, right? And then definitely none of you are twins or triplets or anything. There's no double or triple bets. Just everybody single by single by single by single. Now let's say these 7 children, there's what a firstborn, a secondborn, a thirdborn, a fourthborn, a fifthborn, sixth, and the seventh. You would believe me that the firstborn would get what more respect than every other one, because what second to 8 or second to 7 are respecting the firstborn. The secondborn will get what respect from what third to 8. If you're sharing, there's this thing they used to do them when we were a lot younger, when they're sharing meats or anything in the house. And what do? They start from giving the highest person first to choose before every other person choose, and then the last person takes what the last one. That is what in the word seniority. Right? That is how it is in this hierarchy. Hierarchy just means what? Ranking, which is what the same thing as what seniority. So I told you that these PDRs are just like patterns. Do you understand? But then these patterns, they are scattered everywhere, but then one person senior the other. Do you understand? That's why that's what you're learning when you're talking about premium discount arrangements, right? Now, after these PDRs, we have something called MB, which are what? Mitigation blocks, right? These are the second. The third one is what? The BB, the breaker blocks. Then we have what? Liquidity void, which I did not teach yet, right? And then we have what? FVGs, which you can understand as well as what? Imbalances. Then we have what? The order blocks. And then we have what? Rejection blocks. And then we have what? The last one, old highs and what? Lows. Okay, these are what? Order of price, premium discount arrangements. Now for the reclaim block, I told you that this is how a reclaim block is formed. First of all, among all of these hierarchies here, the order block is not the first. It's like 1, 2, 3, 4, 5, 6. It's like the sixth child of whichever father or mother is this, right? It's like the sixth child. But it is the one of the most important. Emphasis of importance. Importance is not the same as powerful. Neither is importance the same as strong. Do you understand? but it is important, but it is not the highest. It's just like what do they call it? For most of you that are Christians here, you remember the story of is it Jacob that had 12 sons, that Joseph was part of it, I think so, right? Remember that Joseph was the one that was being that was sold, right? In Egypt. He was the one that was sold. He was the one that God picked to be what king over his brothers. Now he was not the first son, right? He was like I think he was even the last son, right? He was not the first son, but it was what the most important. Do you get? Just like how you understand that story, that is how it is here now on the charts. The other blocks are what important, but not the most powerful. Why is Joseph important? Because he was the one that saved the people of God. Do you understand? He was the one that God picked to rule over his brothers. Now, why are other blocks important? Because most of these blocks that you see need to be created from other blocks. Another block needs to have failed before these blocks are being created. That is why other blocks are what's important. But these things, when they are being created, they are more powerful than the other blocks. Do you understand? So the first one that we have is what the reclaim block. And I told you that this is what the reclaim block looks like. When price creates what another block necessarily in the true sense of definition is just the last bearish candle before a bullish one. Before bullish candles, just like this, price creates what one bearish candle and then start creating what series of what bullish candles. This is what an order block. Let's say this is bearish, and then every other thing is here. Every other thing here is what bullish. This is exactly what an order block looks like on the chart. But then I told you that these other blocks, that's the only difference that they have between a bullish order block and a demand zone, because a demand zone must break structure to be called what a demand zone. But an order block just needs to create a bearish candle with series of what bullish candles, or bullish candle with series of what bearish candles, and is what another block. So I told you that to know high probability order blocks, don't use the whole fact that it does not need to break structure. Your order blocks must what break structure, which means that in the curriculum of this sample class, you're taking your demand zones as what other blocks. You're treating other blocks the same way that you would treat what your demand zones, which means that what other blocks must what break structure, right? And then permit me to take this thing off, please. And so you now have what price creates what a higher low, and then a higher high. At this point, I don't think structure should be an issue for any of you, right? And then you have what price now do what give you like a structural form of inducement. I already explained what the structural form of inducement is under liquidity and inducement, right? Now let's say price does what pulls back, which is a criteria for our inducement to be valid. It must pull back into 50%. It's what emphasis on must. If you don't know the meaning of must, go to dictionary. Must is not may, right? This is what's non-negotiable. This is non-negotiable. You must pull back into 50% to be what a valid inducement. Okay, I don't want to see any question on must it. I already told you guys now to go back to dictionary and check the meaning of must. What you should ask me is was that this should pull back. I think I don't worry, it's in the general class that I will address this. In the last class, before I started the last class that we had, which I think was not Friday. Okay, it was Friday that we had the last class because we skipped Saturday. I taught you guys how to use, what do they call this? How to use the Forex factory to know which day there's an important news, right? I told you how to find out news days and even how to read whether it's an high impact news, medium impact, or low impact. And then somebody is still telling me that they want to transition from synthetics to Forex, but they don't know how to read news. Who should they follow on Twitter? That's like really annoying because these are things that I emphasize properly on. If you miss a class, go back to the recording, because there are questions that you just asked me and I just feel like I have failed. Do you understand? Like I'm talking to people that are not listening. As much as I'm putting in efforts, you need to put in efforts too to understand. Most of you are new to all of these concepts, and it is totally fine if you don't get it at once. it is totally fine that some days you have something to do in school and you skip classes. It is totally fine that you slept off when it was time for class. It is totally fine that you got tired and you decided to miss classes. Every day must not be or must not go as planned. But where it is now wrong is when you don't go through these things and decide to punish others with questions that are not reasonable or questions that have been answered multiple times. If there's any pattern that I adopt when teaching, not even just trading wise, when I'm trying to explain something to a colleague or a junior colleague as well in school, I try to re-emphasize because I know that if I say it many times, it becomes repeated in your head. So you can watch a recording of 30 minutes and you realize that I said the same thing 2 times or I said the same thing 3 times. If I should go back to my recording when I was defining reclaim blocks and breaker blocks, I can definitely boast that I defined reclaim blocks being what created from the failure of an order block. If I don't say it in that because I said it not less than 3 times, right? So hearing somebody asking a question on something that you said 6 times can be very disappointing. And to be honest, you see all of these things that I go back to do classes for slow learners. Most people won't do it for you. There are too many. I learned from people. I didn't just like jump into this space and start making money or anything. I learned from people before I got here. So I've gone through mentorship as well. I've been a student, right? I am still a student. I still learn from people. Do you understand? So this is to say that like I know the pattern that most people take, and it's not as lenient as this is. And I don't want you to take these things for granted. You paid to be here. I don't like the fact that most of you like your motivations are not as high as it should be. You know, in the beginning of this class, how many people? 700. How many people are attending classes? But then it's not an issue because I understand that most people may not attend live classes. Even if I told you that live classes are better, but always go back to the recordings so that I don't keep repeating the same thing 100 times. Always go back to the recordings. I'm begging you, like literally, this is not even about me just complaining. I'm begging you, right? Your success is going to be very important to me because it becomes part of the things that I've done and it's things I can boast about, right? So I need you to make it so that I can say that I helped you do it. Do you understand? Now back to what I was talking about reclaim blocks. If you look at this now, price created what? An order block. Just like this, I already taught you how to validate order blocks, which is what distinct validations, like the sweeps, the break of structures, the premium discount, the inducement, sweep, and all of that, right? That is what your validations. Now you have this order block, the price created. Now remember that this is what the valid order block to trade from. Sometimes you can have order blocks without inducement and all of that, which may not meet your criteria, right? Which are still what order blocks, right? There are order blocks and then there are what other blocks that are valid for you to trade from. Okay. Now let's say now this particular order block now price comes and remember that the function of every order block on the chart is to do what? Is to send price back up to the upside, right? Meaning that for bullish order block, you anticipate that when price comes to a bullish order block, what it sends price back up just like this. And if you should flip it for a bearish order block, just like this, you anticipate that when price approaches what a bearish order block, that it sends it back to the downside, just like this. So the functions of this bullish order block is to what send price back up, and the functions of what this bearish order block is to what send price back, back down, yes, for bearish, bullish send price back up. So imagine a case scenario whereby this is the function of this thing, but it fails to do that function. Like it fails to carry out this work that you have given to it or this job that you have paid it to do, right? In this case, there has not been what a failure. When an order block is unable to take price back up, a bullish order block is unable to take price back up, it is what, in this case, it has what failed to carry out its job. Or when a bearish order block is unable to send price back down, in this case, that's what failed to carry out its job. So now it's going to create another PDRA. Do you understand? Now, what PDRA is created? Work with me. Let's say now, the important thing is this failure on this order block can be of two types, right? Let's say this is one. As price is approaching your point of interest, he mitigates it and does what? goes to the upside a bit, reacts to the upside, it's already carrying out the function. And then midway, or oh God, that television is too loud. Please, I'm in class. And then price what mitigates it and is going what to the upside, and all of a sudden fails it. Right? This is what a way that if that another block can be failed. Okay, which is price doing what? Price reacting first before failure, just like this, right? That's why some of the times you guys see that, oh, you you have a trade setup, you are in profit, and then you have a trade setup, you're in profit, and all of a sudden, what happens? Price reverses on you. That is price taking out what's an order block. Now, that is going to be very different from what happens here when you have an order block of consideration, and then what happens? Price now does what? Fails the order block without reaction. Now, this is the difference between what I mean by a reaction and what I mean by what? Without a reaction. This is what? This is price taking out an order block with a reaction. And this is price taking out another block without a reaction. This one was just like when price mitigated your entry, you took what? A straight loss. It did not even go in profit first before taking it out. Instead, what? It took it out once. And if you look at this one now, this is what price reacting first, giving you little profit first before finally what? Taking you out. This is an order block being filled without a reaction. This is the one being filled with a reaction. Now, I guess you guys can see what the difference. Now, I told you that when an order block is filled like this, which is when an order block is filled, but first there was a reaction to it, right? So when an order block is filled with a reaction to it first, it creates something called what? A flip zone, just like this. Now, that supply level that filled it is now going to be like this now. This is what a flip zone. In the usual markets, as at 2022, I think, when flip zones were like a very, very crazy thing, right? This is how to have traded these flip zones. You now anticipate that price comes back to it and those what? Sell down. But you know, in today's market, imbalances are now very important considerations. Do you understand? Most of the time, this move that takes you down to entry can be an impulsive move, creating what? An imbalance. And that is why you can have your flip zone point of interest here. And what does price do? Sweeps above it to what? Fill the imbalance and start selling down. Do you understand? Now, that's why I told you guys that for the purpose of this class, I don't want you trading flip zones. I only taught you flip zones so that you can understand what flip zones are. Or if you see somebody trading it, you can be able to interpret what they have done. Do you understand? But then they are not profitable enough for me to ask you to focus on them or incorporate them in your trading strategy. So for flip zones, no, but you know what flip zones look like and how they are usually being traded. Now, so you see, you've understood that when price does takes out a level with a reaction, it creates a flip zone. Now, the one that now takes out without a reaction, what does it create? That is what I'm talking about, that I call a breaker block. Remember, with reaction, flip zone. Without reaction, creates a breaker block. Now, what's this breaker block? This breaker block is being created when price takes out this level without reacting to it. You know that there are orders resting on an order block. That is even why it is called an order block in the first place, because there are orders resting on it. So when price sweeps through that breaker block without actually executing the orders here, without picking those orders, it just sweeps through those orders, right? It's going to come back into that level to do what? To pick the orders and then sell, to clear the orders resting on that level and do what? Sell, just like this. This is what the breaker block looks like. This is the simple illustration. Price takes out a reclaimed block level without reacting to it and then pulls back into it and does what? Sell down, just like this. This is what a breaker block level, just like this. But I told you too that what the breaker blocks, it's not like they don't play out these days. They do actually, but you would have better chances waiting for a reclaimed block. Do you understand? So why not cut out the losses and just do the one that works better, the one that works right? So instead of waiting for these breaker blocks or trading these breaker blocks or being involved in the move that execute this breaker block? Why not wait for price to do what? To take out the breaker block before looking for your entry? Because you understand that now the reclaim blocks are formed by the failures of what? Breaker blocks. This is a breaker block. So if I say that a reclaim block is formed when the breaker block fails, it means that for price to create what? A reclaim block, this breaker block has to what? Hit stop loss. Remember that if price does what? When price takes out a level of an order block without reaction to it, right, just takes it out straight with little or no reaction. You know when somebody says something is what? Negligible reaction, a reaction that is not what? Significant. That is what? A negligible reaction. So little or no reaction creates what? A breaker block. Now it is now anticipated that price is going to pull back into that breaker block and does what? Sell. Just like this. This is the order in which breaker blocks are formed. But imagine a case scenario whereby instead of doing that, it just does something like this. Your breaker block hits stop loss. This is now what is going to create what? A reclaimed block. So failure of an order block with reaction, flip zone. Failure of an order block without reaction, little or no reaction, breaker block. Now failure of that breaker block creates what? A reclaimed block. And just like the name reclaimed, what are you anticipating? The price pulls back into that level, that initial order block. You know what they say reclaimed? Have you seen people fighting for something now? Let me say, let me use a fictional story now. A woman now loses her husband, and then the husband's family starts coming towards take her husband's property and everything. And let's say now they have taken the properties successfully, and then she was lucky to like file for court charges, and then they found out to be worthy of taking the husband's properties back. And then now she has reclaimed the properties that they took from her. For you to reclaim something, it means that you lost it at first, but now it is yours again. Do you understand? Reclaim, take back, possess the ownership of something that you previously, it was your own, but it was lost. So now you have it back again, right? Like this now, this order block was the initial owner of what? The orders on this level. But then the breaker block came and stole it from it. But now it has what? Reclaimed the what? The ownership of those orders. You understand? The name reclaimed means what? Taking back. So which means you're going to trade them the initial way you were going to trade them with these orders, which means the woman that claimed the properties is now what? The initial owner of the properties. The initial owner of the properties now what? The real owner of the properties again. Is now the main owner of the properties again. The initial order block that was here now is now the main owner of what? The orders again. So you're anticipating that price comes back into this zone, just like you would have anticipated that it comes back if it was what? A normal order block that was not broken. You understand? So you're trading it like that initial order block that it should have been. The price pulls back into this zone and does what? Continues to the upside. This is an example of what? How reclaimed blocks are formed. So now you understand that what? Failure of another block without a reaction creates what? A breaker block. Now the failure of that breaker block creates what? A reclaimed block. This is what I mean when I talk about the reclaimed block PDRs. This is the oldest brother of all of them. But then the mitigation blocks looks very similar to what? The breaker blocks. The difference between the breaker blocks and the mitigation blocks is that the breaker blocks are used for reversals. By reversals, I mean trend reversals. Why the mitigation blocks are used for what? Trend continuation. Permit me to just say trend C or trend right? Trend continuations. Okay, the breaker blocks, trend reversals, mitigation blocks, trend continuations. A lot of people mix the two of them up, right? But they are not the same. Okay, you know when you have price coming in an uptrend like this, and then a breaker block is an order block is filled, right? Just like this price takes out an order block. You're now anticipating, this is a bullish order block in this case. You're now anticipating that price will pull back into that bullish order block and sell. In this case now, instead of buying now, you are now what? Selling. This is a trend reversal. It is different from when price is moving like this. and then you're now looking to what price is moving in what series of lower highs and lower lows, the same trend, and then you're now looking to what sell from those lows. This is what trend continuation, because price was initially coming what in a bearish way. So you are looking to what continue the trend. This is continuing trend, mitigation blocks, but this is what changing trend, breakout blocks. I think I saw something similar happen on gold today on mitigation blocks. Okay, let's look at this now. We had price take out this level. This is gold on the 2 hours time frame, and this was today's price action, right? This is a higher low, this is a higher high, a higher low, a higher high. And then what happens? Price comes, creates what? Takes out this low first, then gives you what? Another confirmation by taking out the next low that, okay, this is now a bearish market structure. Because remember that this is what? A change of character at this point. And then price comes back to put in what? Another high, and then does what? Puts in what? A low, which in this case now, you now confirm that, okay, price is what? Now bearish. What are you starting to look out for? What? Bearish trading opportunities. And then what happens in this case? Can you see that price came back as it was moving now? This was the previous lower low. This is what? The lower high, the lower low, the lower high, the lower low, right? Now, can you see that the next lower high came back into what? Into this lower low as per continuation. I told you that mitigation blocks are caused by what? Impulsive breaking of those lows. It must be impulsive and significant. Do you understand? Price must break it very well and go down after breaking it. Just like this now, you can see that after price created something like this, after breaking this particular lower low impulsively, what did it do? It pulled back into it and did what? Putting on that low. This is a mitigation block in today's price action. I'll be on today's price action on gold, right? This is an example of a mitigation block. These are the entries that you see that you don't understand how the person took it. Do you understand? This is just how it is. If you look at what I illustrated for you at this point, yeah, you can see price is what? In a downtrend, just like this. Price is what? In a downtrend. Then using the previous lows that were broken impulsively, it must be broken impulsively in balance, like a proper imbalance on higher time frames. Do you understand? And then comes back, pulls back into it, comes back, pulls back into it and down. This is a type of key level for people that trade key levels. This is their type of A-shaped key levels. Do you understand? So this is how the mitigation blocks look like. It's different from the breakout blocks that is like actually a reversal in trend. The bullish order block creates a bearish breakout block. A bearish order block creates what? A bullish breakout block. Just like this, price is coming, creating a series of what? Lower highs and lower lows. You have this particular lower high, which is what? An order block, and then price comes, takes out that particular lower high, and what does it do? Takes it out impulsively. We're now anticipating that it pulls back into it and what? Continues like this. This is what? This is a bullish breakout block being created from what? A bearish order block. So breakout blocks are usually for trend reversals, while mitigation blocks are what? For trend continuations. And then this is what the reclaim blocks what they look like. There are a lot of examples. If you look at the previous classes that we did now, you can now go through the examples and understand what I was talking about, right? But then now you understand the concept. It will be easier to now watch the previous recordings and see what exactly I was talking about there. It will be easier for you to grasp. Okay. Now I'm going to have to end this. Have I talked about? Okay, yeah, I've literally talked about all of them. I think the four major ones. The FVGs, I already told you when we're talking about liquidity and inducement. For the old highs and lows, we're going to get to this again on entries, right? That's under targets, I think. Okay, so I'm anticipating or I'm expecting now that at the end of this class, at least you have what? An idea, an insight, or a clear and full understanding on these four PDRAs. I want you to go back to the chart the same way that you mapped out your demand and supply zones. Map out the demand and supply zones and watch them fail. And then when they fail, see what happens, what price creates. Do you understand? When they fail, check, did it fail impulsively or not? If it failed impulsively, like price just failed it without reacting to it, then you now try to see if it created this is how you identify these things. If it created what a reclaim block, or if you created what a breaker block, try to, I want you guys to identify these reclaim blocks, at least 2 reclaim blocks on the slow learners group. But this is for the slow learners, please. On the slow learners group, identify 2 reclaim blocks, identify 2 mitigation blocks. For the mitigation blocks, focus on the higher time frames. You see them there, they actually happen, they are key levels, right? Identify, like you can see an example of what I showed you now, the one that happened today on good, right? Something just like this is what they look like. Continuing price action, right? Identify 2 reclaim blocks, 2 mitigation blocks, identify 2 order blocks, and then identify 2 breaker blocks. Okay? You can use any chart of your choice, whether synthetics, forex currencies, or cryptocurrencies. They happen everywhere. Okay? And I would like to see your assignments before Wednesday's class. All right? So I'm hoping that you are able to follow today's class on interest. Please attend the interest class today if you can attend live. Just be there in the next I think 1 hour or less. Yeah, 1 hour 20 minutes. We would have another class again starting interest today. All right. So if you have any questions, please drop it on the group. I'll try to see if I can go through it. I'll try to see that I go through it. Sorry, before the other class starts. All right. So in the meantime, take your results. The recordings will be uploaded to the live sessions. Stan would upload it so that you can go through it again. If you're still confused, take your results and see you guys again by 9 p.m. Stan, you can